Forward, we have with us Indranil Sengupta, economist and head of research at CLSA India, joining in on the show right now. Indranil, all these 5 pointers that my colleague mentioned, that aside, but I think top of everyone's watch list is whether RBI is going to bite the bullet and move on rates.
Yeah, so thank you for having me. We do expect the RBI to hike the reverse repo rate by 15 basis points this time, and by 100 basis points over the entire fiscal, and 50 basis points next fiscal. So all in all, 150 basis points of rate hikes, based on more than 200 basis points of hikes by the Fed, as well as a relatively high inflation.
That, Indranil, but the street is also closely eyeing any sort of measures in order to avoid disruptions in the bond markets. What are you expecting on this front?
So, if you look at the bond market, uh, things are relatively better than before, in the sense that if we do see high oil prices and a higher current account deficit, then you will see more of capital outflows, and that will enable the RBI to do OMO. So I do not think the risks to the bond market have increased, over the last couple of months. So we see the 10-year at 7.5 by the end of the year, uh, and that should be manageable, especially now that the RBI has greater headroom to buy GSecs.
Will you watch out for by way of commentary on the projection of the trajectory of inflation? And do you believe that we could see something as well on liquidity management?
So I think it depends on where you have oil prices. If you have oil prices at, let's say, $100 a barrel, then clearly inflation is going to be around 5.5%. If you have oil prices at $115 a barrel, then it's close to 6%. So I'm sure that the RBI will have to hike its inflation forecast. And if you are talking of inflation around 5.5%, that's not too high, because India's growth maximizing inflation is around 5.5%. The problem is not that inflation is very high. The problem is that rates are very low, and the last thing you want is to continue with negative real rates for a long time, because that's an invitation to future inflation.
Indranil, I think, besides the RBI moving on rates like you're predicting this time around, what one would also look out for is what is the trajectory or the Indian dot plot, if I can call it that, that the governor talks about tomorrow. Do you think A, he's going to give out such a dot plot, and B, what is it that you're anticipating? How many more hikes to go in this year?
So we are looking at 100 basis points of hikes overall. I don't think it has been the practice of the RBI to give out a dot plot. And clearly, we are in a very uncertain world. So as you can see, the Fed, how the dot plots have been preponed. So I doubt if the RBI will give out a dot plot.
I was wondering as well, Indranil, as to what you're expecting in terms of the GDP target revision this time around, especially at a time now when there has been some sort of an economic recovery and normalization from what we had seen in the COVID pandemic era.
So we are forecasting GDP at 7.4%. The RBI is at 7.8. So either they leave it there or maybe bring it down a bit.
And, going forward, give us a sense as to what the trajectory is in terms of, the Reserve Bank. You mentioned that you're expecting a 100 basis points rate hike over the entire fiscal.
Yeah.
Okay. What's the outlook as well in terms of how you're looking at the timeline, some sort of other commentary, a change in stance from the Reserve Bank coming in this time around? Any other particular measures that you expect?
So I think the stance issue is, uh, I don't attach too much of importance to it, because what really matters is what you do rather than what you do with the stance. I mean, we have seen all sorts of policies with the stance. So I think the stance is more noise, and what really matters is what you do on the rate side.
It sure does. And we'll find that out tomorrow. But Indranil, good to have you in the show. Thank you so much for taking the time
Thank you.
out.